Hello and welcome to Explain the Charts, where we break down the latest market moves with a blend of news and technical analysis. Today, we're diving deep into GBPUSD, exploring the forces shaping its trajectory. Recent headlines reveal a strong pound sterling, bolstered by high interest rates, political stability, and foreign investment seeking bargains. However, the US dollar is regaining strength, and traders are anticipating an interest rate cut by the Bank of England, which could impact the GBPUSD outlook. Let's start by examining the daily chart, which provides us with a broader perspective on the GBPUSD's recent performance. Looking at the daily chart, we see that GBPUSD has been on an upward trend for the past few months. The recent gains can be attributed to the strong economic fundamentals of the United Kingdom, coupled with the Bank of England's hawkish stance on interest rates. However, the past week has seen the pound lose ground against the dollar. This reversal could be a result of traders anticipating an interest rate cut by the Bank of England, which could weaken the pound. It's important to note that the US dollar is also gaining strength, as traders speculate that the Federal Reserve's recent pause in rate cuts may be a sign of a shift in monetary policy. Let's zoom in on the 1-hour chart to get a closer look at the GBPUSD's intraday movements. On the 1-hour chart, we can see a clear pattern of consolidation. The price has been oscillating between 1.3050 and 1.3150 for the past few days. This range is likely acting as both support and resistance, suggesting that the market is indecisive about the GBPUSD's next direction. This consolidation phase is likely a result of the ongoing tug-of-war between bullish and bearish forces in the market. If we take a closer look at the 15-minute chart, we can see that the price has been bouncing off of support around 1.3050 and hitting resistance around 1.3150. The price has also experienced several short-term reversals within this range. This suggests that traders are actively buying and selling the GBPUSD, creating a dynamic market. This volatility could be driven by the uncertainty surrounding the future direction of interest rates in both the United Kingdom and the United States. It's important to pay attention to the volume levels, as high volume can signal a stronger breakout or breakdown from this consolidation. Looking back at the news, we see that the recent mixed inflation numbers in the U.S. could complicate the Federal Reserve's outlook for future rate cuts. This could have a significant impact on the dollar's strength and therefore on the GBPUSD. Traders are also watching the UK's general election next year, which could influence the GBPUSD. The Bank of England is expected to cut interest rates by 25 bps 4 times starting in the summer. This could lead to a weakening of the pound, as investors may shift their focus to other currencies offering higher returns. Now, let's try to connect the dots between the news and the chart data. The recent reversal on the daily chart could be a reflection of traders' anticipation of the Bank of England's interest rate cuts. The consolidation phase on the 1-hour chart is a likely result of the tug-of-war between bullish and bearish forces. Bullish forces are driven by the strong UK economy and the current high interest rates. Bearish forces are driven by the expected interest rate cuts and the strengthening US dollar. This uncertainty in the market is reflected in the short-term reversals and volatility on the 15-minute chart. To make informed trading decisions, it's essential to identify key price levels, trends, and potential reversals. The daily chart suggests that a significant support level lies around 1.2800, while resistance is likely to be encountered around 1.3200. On the 1-hour chart, we've identified a clear consolidation range between 1.3050 and 1.3150. The 15-minute chart reveals a dynamic market with short-term reversals, indicating active buying and selling around these support and resistance levels. If we see a breakout above 1.3150 on the 1-hour chart, it could be a strong signal for a bullish trend in the GBPUSD. Conversely, a breakdown below 1.3050 on the 1-hour chart could signal a bearish trend. Traders should pay attention to the economic data releases, especially those from the United Kingdom and the United States. Key indicators to watch include UK GDP, industrial growth, inflation, and interest rates. In the US, traders should monitor producer inflation data and jobless claims. A strong economic data release from the UK could reinforce a bullish trend in the GBPUSD. Conversely, weak economic data from the UK or a strengthening US dollar could weaken the GBPUSD. Remember, the market is constantly evolving, and it's crucial to stay up to date with the latest news and events. To summarize, the GBPUSD is currently in a state of consolidation. The daily chart suggests support around 1.2800 and resistance around 1.3200. The 1-hour chart shows a consolidation range between 1.3050 and 1.3150. The 15-minute chart indicates a volatile market with short-term reversals. A breakout above 1.3150 on the 1-hour chart could signal a bullish trend. A breakdown below 1.3050 on the 1-hour chart could signal a bearish trend. Traders should keep an eye on economic data releases, particularly those from the UK and US. Strong UK data or a weakening US dollar could reinforce a bullish trend. Weak UK data or a strengthening US dollar could weaken the GBPUSD. Remember to stay informed about the latest news and events, as they can have a significant impact on the GBPUSD's direction. Happy trading!